Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Let's take stock of the global news flow. Hopefully, we'll also get a guest on the Jackson Hole outcome. First, the news flow. Jerome Powell calls inflation too high, warns that we are prepared to raise rates further, quote unquote. S&P and Nasdaq close higher though, snap the three-week losing streak. Oil futures are up 1% to one-week highs on soaring US diesel prices. And Asian markets start the week higher after the Jackson Hole announcements. And in case of China, because of the trading tax cut, the Chinese markets canter as well. Now, all of this is positive because what happened on Friday for our markets wasn't the most pleasant. Nifty 50 actually declined 121 points to close at 19,266, and the volatility increased by 3%. The bank Nifty decreased by 0.5%, led by PNB, followed by IndusInd Bank. The broader markets ended negative as well. Nifty mid cap was down nearly 1%, small cap nearly 0.5%. And all the sectoral indices are in the red, with the Nifty PSU Bank decreasing the most, followed by Nifty Realty. And we didn't have the most pleasant end to the week. But what happened? And therefore, what does this mean for the trade setup for the day today? Well, I think my takeaway is that the Bank Nifty, which had kind of relatively outperformed, managed to break the 4-week losing streak and demonstrated relatively better performance compared to the benchmark index. This week, for example, at the start of the trading day today, we've had multiple brokerages, global names talking about buying into some of the private banks. Goldman Sachs has this note on HDFC Bank, for example. So there's lots happening within that space. Do watch out for the Bank Nifty. Can that be the reason why the market reverses some bit of its recent losses? Let's see. The supports are very varied for the Nifty. The highest put OI is at 19,000 strike, followed by 19,300. And that's the issue. It's no longer that it's 19,300 and 400 or 200 and 300. It's kind of now getting a bit varied for the Nifty. So let's wait and watch. And frankly, FPI flows continue negative in the cash market. FPIs have sold stocks worth about 15,800 crores thus far. And the strength in the dollar index, as well as the 10-year bond yield at around 4.25, are certainly short-term negatives for FPI flows. And if those continue, then there is a bit of a balancing act that happens to the DI buy number as well. Add to that, the weak monsoon and the skewed spatial distribution may keep inflation expectations elevated, which is also not the best news from our market's perspective. So there are some short-term hiccups for sure, excuse me. So in light of all of this, what are the kind of stocks that one should monitor in the session today? I think that's the other key thing, right? So to my mind, I think first, the price and volume buzzers for Friday's session. So Vodafone Idea, these are the liquid names I'm talking about. There are stocks like Saint Gobain and some of the others which have shown some tremendous price volume action. But here's what I'm talking about. Vodafone Idea, 9% higher, 4.85 times volumes. Indiabulls Housing Finance, 9% higher, 3.5 times volumes. Sun TV, Indus Towers, Bajaj Finserv. All of these are very interesting. In fact, on Indus Towers today, Macquarie has a note wherein they have said that the global team of Macquarie has initiated coverage on some of these companies in the Far East region. And if you do a comparative analysis, then Indus Towers comes out really strongly. So watch out for some of these names, very interesting ones, and the way they did on Friday. And normally you expect if Vodafone does well, Indus Towers too could do well. Survival of Vodafone is a great boon for the stock of Indus Towers. Some stocks in focus are Zomato, Adani Group stocks, and Reliance. Now, with Adani Group stocks, clearly the Friday commentary from SEBI probably means that at least dealers tell me that, and in fact experts tell me that it's come out better than what the street might have anticipated, if you will, from SEBI's end. We'll get to know the final comments maybe on the court verdict, etc., all, and SEBI's report on Friday, but on Tuesday. But prima facie, from what came out on Friday, two market participants didn't seem to be that big a negative. Never know. There could be a bit of a reversal in the short-term hiccups that some of these stocks have faced the last 2-3 days. Standard disclaimer, of course, the Adani Group owns 14% stake, is in the process of acquiring the balance 15% stake in Quitel Business Media, which is the owner of BQ Prime, which owns the platform on which you are watching this broadcast. But I call a spade, and it does look like on Friday evening that whatever came out was not as big a negative as the street may have believed. Don't be surprised if there is a bit of reversal, if you will. Reliance is a stock in focus simply because of the AGM today, so that will be keenly watched out for. And of course, Zomato is in focus for multiple reasons. The fact that Zepto has become a unicorn becomes a positive for Blinkit. SoftBank stake might be likely soon, and Morgan Stanley has this note on Zomato, but they are over it with a target price of 115. They say that Zomato, according to their channel checks, has rolled out a platform fee of 2 rupees per order. In select cases, even 3 rupees per order. And if this sticks through, then it could drive profitability sooner than anticipated. In India, the company received an LOA from SAIL for installation of 1,000 tons per day a cryogenic oxygen plant at Roorkela. Let's move on from this plate to construct, operate, and maintain the plant for a period of 20 years. So Linde India has a stock in focus as well. Then L&T, the company's received shareholder approval for proposal to buy back shares of up to 10,000 crores, set September 12th as a record date. PSU banks and SBI might be in focus. The government may raise retirement age for bank CEOs by 2 years. The government is considering giving 10-month extension to Dinesh Khara of SBI. BEML has backed an export order worth $19.71 million, so that could be in focus. Watch out for rice stocks. That India has imposed 20% export tax on shipments of parboiled rice, and this could impact some of the rice stocks negatively today, maybe. By the way, we have Jeffrey Dennis joining in just a moment, but before I get to him, just one last thing. The Morgans, I was looking at multiple brokerages, like I said. There is HDFC, Goldman Sachs on HDFC Bank. There's Macquarie on Indus Towers, excuse me. There is Morgan Stanley on Zomato as we spoke. I think the one that stood out for me was the Morgan Stanley note on BPCL. They have an overweight rating. The target price has been raised to 485 from 425. They say it's a paradigm shift in earnings outlook on improving global fuel demand, local policy reforms, and shift in capital allocation. The global fuel demand surpassing expectations, according to them, and India's oil consumption growing above trend. $8 billion capex shift to chemicals could drive ROEs, and at 1.2 times, two times FY25 price to book, BPCL prices in potential loss in fuel sales and is 40% below level when government reforms kicked in during 2014. So Morgan Stanley is very constructive on BPCL. Watch out for this stock as well in the session today. Remember, the markets are doing well. As I said, maybe they digested the Jackson Hole Symposium well because US markets did do better or did do well in Friday's session. Who better to put that and the impact of Jerome Powell's comments on EMs into perspective than our favorite Jeffrey Dennis? He joins us right now. Jeff, good having you. Thanks so much for joining in. Good evening.
Good evening.
So Jeff, what did you make of Jerome Powell's comments?
Well, I think what he did is give the Fed maximum flexibility, and I think that was his goal. He didn't want to say that rates had finished. He didn't finish going up. He didn't want to say that they would have to go up a lot more. I think he was really telling us between the lines that they're going to be very data dependent, and therefore he gave himself maximum flexibility. Implied, of course, that 3% inflation, which is where we are now, or just over 3%, is not good enough yet. It's not low enough yet. Therefore, they may have to raise interest rates. But I gather, really, myself from the presentation that he gave, the speech that he gave, that they don't really want to raise rates again or much more anyway, because they think they're nearly there. But I think they're just giving themselves lots of flexibility.
Jeff, based on your assessment of what the economic indicators are looking like, we are also waiting the Friday jobs data, of course, but based on the economic indicators, based on what the Fed has said, so on, what does that commentary plus maybe an extended pause, if you will, with maybe a one hike in between, what does it mean for risk assets?
I think long term it's good for risk assets. I still believe it's good for risk assets because come what may, we are either at the peak of interest rates or we're very, very close to the peak. I argued after the June inflation data, which was 3% exactly, that this could be the low point for inflation this year on year, because the comps with a year ago become much more challenging now. And I think what the markets have got to get used to is that inflation is going to stick around 3% for a while now, probably until early 2024. And if that's not good enough for the Fed, that will give us potentially another rate hike, maybe not the next meeting, perhaps the meeting after that. But I think there are things going on. Oil has drifted a bit lower again. The housing element of the index, your owner's equivalent rent, that's coming down. So I think we will get lower inflation heading towards 2% in the early part of 2024. So maybe we've got to negotiate this period where inflation stops going down. That could lead to some nervousness. I said that a few weeks ago. That's proved to be the case. But at the end of the day, we're near the peak and we're near this magical soft landing that the Fed appears to have achieved. And I stand by what I've said for a long time. There is nothing magical about 3.5% unemployment. If the Fed can get inflation towards 2% or at 2% with unemployment at 3.5% or a little bit more than that, we should be pleased about that. And that's why I think any big sell-off for risk assets, I think, has to be viewed as a buying opportunity, because at the end of the day, we have nearly got to the peak in rates and we still have a reasonably robust US economy.
Yeah, that's the interesting part. One quick question, Jeff, and that's on the rise of the US yields. Now, there are multiple versions out there. Some people talk about how the fact that Japanese and the Chinese might be letting go of US treasuries might have been one reason why prices moved down and yields moved up. Any implications of these yields on EMs at large? Because usually there is you know, kind of a very strong negative correlation, if you will.
Yeah, I think that's right. Now, let me just try to add a point about the rise in yields. You're right. I mean, there were two things that have gone wrong. Or there are two things that have gone wrong for the markets in August. One has been the ongoing weakness of the Chinese economy, disappointment over that, and in fact, with more evidence, the property sector in China is under pressure. With Country Garden being the latest company that's basically essentially going bankrupt, or if not formally bankrupt, very close to that. The other big surprise has been the large rise in yields. Yields in the US, I should say. Now, it does look as if that rise in yields may have peaked out now. They've started to level out around 4.2, 4.3 for 10 years. And if, again, that's where we end up, I think that will ultimately prove to be a buying opportunity. Now, as the Japanese yields go higher, I'm sure they probably will, because the BOJ will be under pressure to change yet again their yield curve control policy. And I think European yields going up is a lot more complicated because the economies there are very weak, and I think they're more likely to stay reasonably under control. But come what may, again, as with short rates, I think we're very close to the peak of long rates. Now, if they do go materially higher and you start to see the yield curve turning into a normal shape again, that might typically be seen to be quite bad for emerging markets because long yields have gone up. But frankly, if one of the conclusions of that is reduced risk of recession, I think what will happen on the back of that is ultimately a weaker dollar. Once again, dollar's been strong lately once more, and that will pull money in towards emerging markets. So I think you're going to have to see a very major move in long yields from current levels, combined with negative numbers on the US economy and maybe the global economy, to really hurt emerging markets at this point, because I think yields, like short rates, are close to their peak.
Got it. Jeffrey Dennis, it's always a pleasure talking to you. Thank you so much for your insights today as well, and have a great evening.
Thank you very much. Thank you.
The pleasure was ours, and viewers. Well, that kind of sums up the view on multiple things, including Jackson Hole as well as yields having inched up and the implications thereof. Jeff doesn't seem to be too worried. So that's part one. Watch out. Asian markets are doing okay. Chinese markets have cantered because of the lowering of the trading tax, and that might also play on mind. But Asia, by and large, is doing okay, following a strong US performance. Maybe, just maybe, we might be in for a good day for our markets today. Certainly looks like that. Lots of interesting conversations at Talking Point 9:30 today. Tahir Bacha of Invesco Mutual Fund joins in. We also have conversations with Vascon Engineers. So Siddharth Vasudevan joins in. That stock was very active. They won a large order as well. So 10:30 a.m. you will hear from Vascon. Trade talk conversation with Gaurav Bisai and AK Prabhakar, of course, happening during the day as well. So do watch out. And the big one, RIL AGM outcome. We speak to a bevy of guests on what does the AGM mean for Reliance shareholders. Lots of posts out there around how the stocks in the last or the YTD have not delivered major returns for investors. Let's see if the AGM changes that for a bunch of group companies. So we'll be out there with some of the best voices out there who can put this into perspective for our viewers. Thanks so much for tuning into the Trade Setup.